Hey Anubhav, welcome. Thank you for taking out time for this conversation. We have been trying to connect since quite some time for this, and glad that you could make time today. Uh,
Sure, Harshit. Really
yeah.
excited. Thank you for having me.
Sure. So I have been looking at your journey and sort of really exciting startups you have done. So you worked for StudyBud in Cubera, you co-founded them, and then had successful exits from both of those startups. And then right now you are working on Rupifi. So could you take us through your journey on how you looking back? How do you find it?
Sure, I think so. Yeah, so I think so. My experience has mostly been financial services. StudyBud was more out of my passion towards Indian education segment. We wanted to do something where we could increase employability. So that was a good learning experience. I would not say we were able to achieve what we wanted to achieve because it still is a large problem. Helping students get the right skills and make the career that they want to make. So especially in tier 2, tier 3, tier 4 colleges where students don't get too many employment opportunities. So we were trying to change that. I think we were not able to really build a very scalable product there. So there were some learnings around it in terms of where we went wrong. I think our go to market strategy was something where we could have done better. We went directly through educational institutions, but there was a conflict of interest there. So we think we should have gone directly to the students, more like a B2C model instead of a B2B2C model. So that was a good learning. Uh, I decided that maybe I was more suited for financial services because that's where was my experience was. So post that is when I started Cubera with two co-founders. Uh, Cubera was a great experience. I think we did everything that we wanted to do. We built a large loan book. We scaled the business. We had great unit economics. We were able to bring down cost of acquisitions for a digital only business to a level where it started making sense. We were profitable from that aspect. Uh, but there were challenges in that journey as well. I mean, there's no startup where you don't face challenges. So in Cubera I learned the hard way how technology can play a big role in scaling a business from 0 to 1 and then 1 to 10 and 10 to 100, right? I think in Cubera we did the first two parts well. The 0 to 1 was done well, the 1 to 10 was done well. uh, but the 10 to 100 required a completely different mindset, a completely different set of skills in the kind of team we were building, and I think that's where we somewhere were missing. And that's what I think the exit to Incred was the right thing, because Incred added that missing piece to that overall puzzle in terms of providing scalability from a technology, from a product standpoint. So yeah, so that was I would say, a mixed kind of journey. Uh, and when you have two such experiences, you kind of try to go back and see what you can do differently this time. So that's where I think learning from both those mistakes, one in terms of how do you really build a good go to market strategy, and second, how do you use technology to scale business. I think both of them I've kind of tried to combine in the Rupify business model, where we have decided we'll go after small businesses and try to remove uh, high cost of acquisition and high cost of collections problem which exists in SME fintech especially. So we've gone through that embedded lending route, which really helps you reduce cost of acquisition and collections cost if you work through the right partner. And what we've done is use tech as the core. So we are more a enabler. You can say a completely API configuration driven company, where we lend through these technology pieces to these anchors, or the embedded partners as we call them. So I think, yeah, it's been kind of a roller coaster, but really good, right from StudyBud to now.
Yeah, that's actually quite interesting. Like you have done both in edtech and fintech. Both of which spaces are quite, you can say, hot right now. Like a lot of startups coming
Yeah.
up, a lot of funding, a lot of people interested in what's happening in these sectors. So before moving, like coming to Rupify, like especially like you have done like two successful exits, and as a founder you are sort of very personally attached as well to the problem you are trying to solve or to the company you are trying to build. So how do you sort of take that decision that now is the time to sort of move on from this particular problem you were trying to solve? So how do you take that decision?
Yeah, so Harshit, I think it's there's no clear answer to it, but I'll tell you how we went about taking that decision. So in StudyBud, what happened is we started with an offline model. So the company was called Excelsior Education. We were going to colleges and doing offline training for students and giving them skills which could help them get jobs. We found that there is only so much we can do because it's very people intensive. You have to go there, you have to be present. How many places can you be present at a point of time? You will need a lot of large number of team members to do it. And then how do you standardize it? Because I may be delivering in a certain way, my team member may be delivering the same content in a different way. So we thought that we should use tech to scale it. So we pivoted and went into the study bud model. But I think what we realized after 2.5 3 years of not being able to scale that business is going through colleges has its own challenges because there is a different uh, end objective they have in mind, which is to get as many more and more students, as much admissions into their system as possible, because a lot of these colleges don't get the right quality of students. So for them to get the seats filled is a big task, right? A lot of these colleges were not even getting half of their seats filled. So so I think because they were more focused on that, they looked at whatever we were delivering as just a means to that end, which is where I think it went all wrong. Uh, so then we again decided to pivot to a consumer, direct to consumer kind of a model, where we were directly, reaching out to students, but we ran out of money. So the decision for an exit in case of StudyBud was we were getting some offers to get acquired, but we always wanted to continue to solve that problem. But at one point we saw that, hey, we can't solve this problem on our own, because we've hit kind of a dead end where we don't have the capital. We have to pivot to a completely new model, which will definitely require more capital. So we thought that maybe this large education group to which we sold may be able to do that, right? They would be able to put in capital, and they were directly selling to students. So the advantage with their approach was they were present in K to K-12 segment. We were present in higher ed segment. There was a very clear cross sell that you could do to graduating students. So they said that, hey, we will push StudyBud to every student who comes out of 12th standard, right? And now is looking for the next phase of education. So I think it was more that kind of a strategic plus capital based decision. Something similar happened in Cubera as well, where uh, the company was doing good. We had raised money very recently before that exit happened. But I think, as I said, we were growing almost linearly. Like it was a very slow, linear growth. It was growing, but it was not what you would, typically expect a startup to grow. You wanted to grow faster, especially considering where the competition was heading. Fintech was very hot a couple of years back. So what we could see is that we needed those missing pieces in terms of technology. Incred definitely provided that. Bhupinder Singh had built a very large portfolio of both a balance sheet play as well as a tech enabled play. So I think what we saw is that we had good discussions with their team. It was not the offer that we decided in first go. It was an offer we had to really evaluate from its merit standpoint. So I think in both cases, it's a decision that a founder has to take, that will I be able to solve this problem on my own the way I'm going ahead, or do I need support? And I think that's where that decision came in.
Got it. It's actually interesting. Like you are sort of very involved in trying to solve that particular problem, and then sort of looking back and realizing that probably this might be the time to either uh, overall for the company what will be good, and like if with acquisition or with
Yeah.
that helps you scale, then that's the right step to take. So coming to Rupify, like just to start with, how would you? There's something called like say ELI 5. Explain me like I am 5. So how would you explain it to someone who is not aware about anything what is happening in fintech? How would you sort of explain it in very layman terms?
Yeah, sure. So I think, very simply put, what we do is, when we talk about India, small businesses are typically accounting for 50% of the GDP, but it's a very simple problem. If I'm a small business, uh, and I sell 100 rupees of products, I make 5 rupees profit, right? Now, tomorrow, I can do 105 rupees of sales, right? Because I'll plow back that entire money plus my profits into the business, and I'll keep doing it. But if I do that, I'll only grow at that small rate of 5%, right? Now, if I want to double this business, maybe what I can do is ask for some capital or a loan from my friends, family, from a bank. And then I will do, instead of 100, 200 rupees of business, right? Uh, I will obviously make more profits out of it, and I'll keep, you know, exponentially growing this business. The problem is, in India, small businesses don't get that credit or capital, right? That access to credit is very limited. uh, if I break down the entire 60 million SMEs in India, the top 10% will get some access through banks and NBFCs. The next 10% are also served to an extent by NBFCs, fintechs, and others. But that bottom long tail of 80% SMEs is where the problem exists. Either they don't have access, or if they have access, it's at a very large or very high interest rates, right? Which doesn't make sense, because if I'm borrowing at crazy rates and my margins are thin, it will always be a negative proposition for me, right? I will not be able to make money on that transaction. So what we are trying to say is that, hey, these small businesses have been struggling with access to credit. The issue is that because they are small, their ticket size requirement is also small. uh, Traditional banking models uh, don't find that lucrative because their costs are very high. So how can we reduce that cost and still make money on small businesses? So what we did is, we said, hey, we will not incur any cost in acquiring these businesses. We will go to their partners. So if you are a business who's working with a distributor, I'll go to the distributor and tell the distributor, you have 100 retailers that you work with, let me offer credit to them. It will only increase your business because now they will buy more from you, right? So that's the model we've taken. We've kind of tried to understand some anchor point for every small business and go to them and try to get like thousands of SMEs through one partner. That really brings down your cost, and that helps you scale this model. So that's truly, in very, very simple terms, the Rupify model. The these complexity of that model comes in the fact that we do pure tech enabled embedding. So if you are the distributor and you have an app through which your retailers buy products from you, we will offer that credit inside your app. So whenever some retailer next time comes in and decides to buy from Harshit, he'll see that, okay, if you want to buy from Harshit, you will get credit to buy, right, from Rupify. So that's basically the pure embedding of a credit product inside the journey. So uh, in actual terms, what we do is, we go to these B2B marketplaces, which are currently growing at a crazy rate. I mean, Udan is just one example, but there are many others that have come in across agri, kirana, FMCG, pharma. I mean, you name it, every sector is seeing digital B2B growing in India. So what we have done is we've gone to all of them, embedded Rupify as a pay later product for SMEs, and SMEs go buy, they choose Rupify pay later option, they get their products on day one, and they pay us after whatever 15-30 days. So that's broadly what we do. It's a plain vanilla BNPL for SMEs.
Very interesting customer acquisition strategy. I would say this is because like you are going to the distributors and then you did not worry about the retail customers which are coming. You are directly using the distributors network for acquiring customers. So
Correct.
I'm intrigued about one thing here, like this distributor. So you are these distributors sort of tech enabled, or do you face challenges like while, because yours is a purely say API product. So when you go to these distributors, do they have enough sort of tech understanding or infra to support this the model you are going them with?
Yeah. Yeah, so I think that's I think a challenge we face. Some of the larger players that we work with, which are pure digital marketplaces, there they do have a tech team, but again there is a bandwidth problem. So we do have to work very closely with them to embed our APIs in the product. But I think the next phase of growth for us is going to be slightly the not so tech savvy distributors, maybe completely offline distributors. So we may have to, create that entire product for them. So we may have to actually give them an engineer, who can create this whole thing for them, uh, digitize their sales process, right? So I think we are thinking about it, how to go about building that. But it's very important that we have to own that piece as well, right? For example, if you take the dukans of the world and the khata books of the world, they've also done that. First, they have digitized the transaction record keeping for these merchants, and now using that data to do any kind of further activity, whether it's lending, whether it's payments, whether it's banking, etc. So what we are also trying to do is first help the distributor in the overall transaction journey, and then power credit on top of it.
Got it. So while building products or thinking about business decisions at Rupify, like for your core user base, do you keep these distributors in mind or retailers? How do you go about that?
Yeah, that's an interesting challenge. So we constantly think about it. So if you look at Rupify, there are four entities here. There is a distributor who's our first customer, right? There is a SME or the retailer who's the end beneficiary of the product. There is also a lender at the back end, because we are doing this credit products right now, and then there is Rupify. So there are four parties to the entire transaction. But I think our core value prop is to the distributor at the beginning. So our customer is the distributor right now. So whatever we build keeping in mind whether we'll be able to sell it to the distributor or not. But at the same time, we have to keep that retailer also somewhere in perspective, because if we sell it to the distributor but the retailer doesn't use it, then there's no value created. So from a value creation standpoint, I think both of these entities we have to keep in mind when we build that product, or when we create or flesh out any kind of a user story or journey.
Got it. So yeah, this sort of gives a very good understanding of what you're trying to build. So like coming to the process of building a company itself. So you have spoken about how critical it is to get your core team right. So there are like lot of you can say like in early stage founders do look for attitude instead of say their educational background or like their risk taking appetite. But how do you sort of, what are some of your say practical hacks which you look for if someone is interviewing with you to figure out whether they fit in with you or not? How do you go about that?
Sure, I think that's something that I won't say anybody has mastered yet, but I'll talk about some things that we do. So Rupify core team, actually, the first 10 people were all people we had worked with before. Not to say that that was the only criteria, But when we started to build the team, let's say I was looking for a couple of engineers, or I was looking for one product guy, or I was looking at one growth person who could do growth hacking for us. The first thing that we, as an individual, you tend to normally do is look for people in your network who you have comfort working with, because the whole risk taking ability attitude problem gets solved. You know their attitude towards work, you know how much commitment they bring to the table, so all that gets taken away. So the first 10 people, Harshit, that we had in our team were all people either I had worked with before, or Ankit had worked with before, or Javed knew from his past experience. And we knew they had done well. And we also knew that even if, let's say, in the initial journey of a startup, let's say we are not able to raise enough money, or we are not able to, there is a capital issue at times, or it's a bumpy road because of, let's say, plans keep changing, we decide to move away from what we initially decide, or pivot, they won't have an issue with that. They're coming in because they believe in the overall vision, or in the founding team primarily, right? So these were people who were coming because they wanted to work with us rather than they wanted to work on that idea. So the first thing was who you are working with, and then what are you working on. So that was the first 10 people. We just had to pick up the phone, call them, and that's it. And they said that, well, they're happy to come on board. So that was that. But I think that is something you can't apply always, right? It's now that we are around 45, 50 people, this is not something I can continue to do. So today what we do is we mostly look for, I mean, I'll speak for myself. I look for three things. One is definitely the risk taking, or the risk appetite that someone has, right? Even though today we are a pre-series A funded startup, we still, I won't say that there is a guaranteed success that we see, right? There is still a long way to go. We have to still prove ourselves. Product market fit is still, a few months away. So what I tell people is that, hey, it's going to be a continue to be a bumpy ride. uh, you need to see whether you are coming in for the challenge of it, or whether you are coming in for the monetary part of it, right? I think that's something we really like to keep very clear on day one. People should relate to the problem in some way. I don't expect everybody to be well versed in financial services, but I always, when I'm talking to them in the during the interviews or during the initial screening, I always try and see if people are able to understand the problem or not. Right? You may not have a solution, but do you really understand why we are solving what we are solving? I think that's something we look at. Educational background not really matters to us. In fact, if you see the team distribution, there is a mix of people. Some of the colleges you and I may not have heard before, right? So that happens. I think in India, there are smart people everywhere. It's just our education system, which sometimes, the smartest people don't are not able to crack competitive exams. So they end up in a college which may not be the best of the lot, but doesn't mean they're not the smart guys. So I think from that perspective, we don't really have the educational institution anywhere in the criteria. I mean, you'll not see it anywhere in our criteria. Of course, where it really comes in is when we go for getting interns to work for us. We really, I mean, and this I should give it to my co-founder Ankit. He's built a very strong process of getting people fresh from colleges, and that's where I think we try and go to some of the top institutions, because otherwise there is no way for us to filter, right? uh, because there are like thousands of colleges. How do you really go to and reach out to so many of them? So you would obviously try and filter the top ones. So we go to a couple of top technology institutions in the country to get interns every 6 months. So that's something we do. But when it comes to getting people who are experienced, I think risk appetite, ability to understand the problem, and stability. I think this is something I look for. uh, if you ask me, there could be reasons why you may have switched jobs or changed jobs, or done that in your career, but I look for people who have been stable uh, in their career mostly. There are exceptions to that, but people who have been more stable are something we look for, because that's something that's missing in a startup. Like, it's so unstable that you need people who at least bring stability to themselves. If your team is also constantly in a flux in their mind about their career, about their future, then it's not the right culture to set it.
Interesting. I think that's a good framework for both, like someone who's trying to see start in their career, as well as someone who's trying to hire for their team to look for these key attributes. So coming to another point, which is in the early stage, which is very important, is the speed. So first of all, how do you sort of define speed at Rupify? Do you think is it primarily only about execution, or how do you overall look at it?
Yeah, I think that's where having multiple co-founders really helps. I think for while I'm more you would say the speed kind of guy who would like to see things churned out, rolled out faster, even though it may not be the best product or the perfect product, but if it works, it's fine, right? If it's able to serve the purpose we are trying to serve, it's good to go. uh, at the same time, I have a co-founder who's been with Google for 9 years, so he looks for the Google kind of product perfection in a lot of things. So what we try and do, we balance each other out there. While speed is important, but we also make sure that we don't roll out a completely buggy, scrappy product. So what we've done is, using the mixed approach so far, we've been able to roll out products where we don't have to go back and change things quite often. So I think that's something that has helped. uh, I won't say that's the best approach. I mean, we are still improving on that. We can be faster. I mean, if you ask me, speed is super critical in a startup's journey. I value speed over anything else. I mean, you can go wrong, but if you're fast enough, you will learn fast. You will fail fast. You will learn fast. Rather than not failing, I would rather fail and learn faster. So I think that's an approach we are also trying to take. We didn't have that luxury initially, because with limited resources, there is only so much repetition you can do. But now with a bit more capital, with the right team in place, uh, I think we are getting there. So you will see much faster execution with in Rupify now. Uh, but I think there's still we can be much faster. I think speed is super important.
Got it. And coming, like, I think, especially in fintech startup, one of the crucial thing which impacts speed is like the compliance or the regulation part. So, do you face those challenges while executing at Rupify, or is it more structured in the B2B lending side?
No, I would say B2B lending is far more difficult, because there is greater compliance and uh, scrutiny on everything that you do. Consumer lending is, if you talk about compliance, it's mostly around, I mean, the more difficult part is around KYC and all,
KYC.
right? Uh, in B2B, there is one more layer added, because now you have a business entity and a business owner entity, right? So you have to do compliance for both, and that makes it more challenging, because while personal KYC in India or individual KYC is still digitized, there is eKYC and there is video KYC and all that happening. A business KYC is largely offline.
Mhm.
There is no single standard way of doing KYC for a business, especially for small businesses, because GST does not apply to them, right? Uh, so while GST is digitized, you can do GST in a completely electronic, seamless way for businesses above a certain turnover threshold. But doing business KYC for small businesses is a nightmare right now, because somebody will give you a utility bill, somebody will give you a shops and establishment certificate, somebody will give you a weighing scale certificate, a pharma guy will give you a drug license, a restaurant will give you an FSSAI certificate. So it's all over the place. There is no one standard document that you can collect, and that too digitally verified.
Hmm.
So I think compliance becomes really difficult in those cases, and especially how do you cut costs if you are doing documentation which is so diverse? How do you really streamline and standardize the whole journey? So we are working on that. We've kind of cracked some part of it, especially for proprietorships. We are trying to do things which are more, which apply to, let's say, 90% of the population. Now the question is whether you really build for that 10% or you leave that out in phase one. So that's something we've done, that whatever works for 90% should be good enough for the time being, and we'll come to that remaining 10% later on. So yeah, compliance has been the tricky part, and I'm the one from a risk and compliance standpoint who looks at this. So I'm always the bad guy in the company, because while the team will say that, hey, let's do it this way, let's look at this as a workaround, but you can't escape compliance. So as a fintech, you can't be caught at the wrong foot. So I'm the one who has to constantly put breaks and controls from a compliance standpoint. But yeah, it's the tricky part. It's still unsolved in India, and we are also thinking how we can play a part there.
Actually surprised at like when you started mentioning like different certificates or docs you get for each of those different sectors. It's actually there is no standard way sort of to verify the identity of these businesses. So coming to sort of a tangential question, like you have done sort of three startups till now, and in each startup your co-founders they are also starting up something on their own. So how did you pick your co-founders at each stage? Do you know from your previous work ex? Do you know from their network? How was that equation?
Sure. I think my first co-founder was a batchmate, so that was the obvious choice. We did a lot of business case studies and business plan competitions in the college. So we had ideas right from college in terms of what we wanted to do. So that was about StudyBud. I think what we realized, both of us, uh, after StudyBud, is that while we liked working with each other and all that, but uh, we were not bringing too much of a complementary skill on the table compared to each other, right? We had similar backgrounds. We were both business guys, right? None of us was product, or none of us was more around tech. So there was only limited value we added on top of each other. So it was a very clear conscious decision that when I started to do something else and Dhruv started to do something else, we were looking for uh, a different set of people to work with. Cubera, I think, was an example where I think my co-founder found me rather than I finding him. He was looking for somebody more from a risk background for a fintech idea. We had a couple of meetings, and I think I was sold on that idea, because I was looking to make a comeback in fintech, and what he had in mind was something I also could relate to. So that's how Cubera happened with Aditya and Anuj. While doing Rupify, I think it was a long search. I had learned that I needed somebody with great growth hacking experience or the right skill towards it, because I can't do growth hacking. I mostly come from a core business financial services background, and then we needed one person for tech and product, right? Uh, so getting Ankit and Javed and finding them was a 15-month process. I mean, I was talking to a lot of people. I was exchanging my ideas with them. I'm trying to understand what they bring to the table, how we do this. So with Ankit and Javed also, we did, like, I think more than a dozen brainstorming sessions, whiteboarding sessions before we incorporated Rupify. right? So I met them September 18. We started Rupify in Jan 20. That's how long it took for us to know each other and decide that yes, we want to do this. And I think you would also agree that you spend the most time with these people now. Like we are a startup. We work like 10, 12 hours a day. You don't even spend that much time with your wife or your parents or your kids, right? So I think it's very important that you are absolutely clear that these are the people you want to work with and uh, comfortable with from a both relationship perspective, your attitude, your wavelength, and what skills each of you bring to the table. So it was that process. I think all of us evaluated each other. I won't say I was trying to understand what Ankit or Javed do. I think three of us evaluated each other. And there was a time when the three of us agreed that yes, we should do this. And I think since then, also, I would not say that once we decided, we've not had our fights or we've not had our disagreements. We've had. But one thing was clear, we were now building for one common objective. So even when the three of us have a disagreement, at least we all know that the other person is also working towards the same goal. So there is no misalignment of goal here. We just need to address each other's perspective and see what's best for the company, right? So I think from that perspective, it has worked out well for us so far.
Very interesting. And like you started discussing about the idea in 2018 and sort of formally incorporating it
Yeah.
in 2020. Yeah, that's like a long journey in itself. So one thing I'm personally curious about, like Rupify has sort of very interesting angel investors as well, like each of them coming from a very diverse background, and they have done, each one of them have done multiple things in their own careers. How do you sort of exchange notes with them, or how do you use that network to sort of incorporate their learnings? How do you go about that? How frequent are those conversations?
Yeah, so I think again, we've been lucky to have some great investors on board. Again, I would say most of them we had known from our past experiences. Uh, in terms of frequency of exchanging notes, I think it's something we have to be very careful about. uh, I mean, these are all operators, they are running their own companies, so they also have their own schedule. So what we do is, when we are stuck or when we think that this is a problem which needs definitely an expert opinion, we go to them. So, like for example, when we started and raised money in March 2020, the first angel round, we started building the product because COVID happened, everything was locked down. So we said, okay, we'll put our heads down, we'll build the product. When unlock happened around June, July, is when we thought that is it the right time to launch, especially when SME lending was nowhere. None of the lenders were out in the market. There was no clarity on moratoriums. There was nothing like that. So at that piece of time, our investors, Ashneer, Kunal, Ramakant, these came and helped a lot. Because they have seen journeys of such kind of, I mean, not really COVID like situations, but these kind of situations where the macroeconomy really starts behaving completely differently. So what do you do, right? If there is a slump or if there is a complete kind of a crash in the market. So we took their opinion at that time, right? uh, the second time I think we went to them was when we were scaling this product, and we needed some opinion in terms of how do we go about, either should we expand to different sectors or should we go deep within one sector, right? That's a choice, that's a decision that a lot of founders face, right? That especially in our case, because SME is not just SME. I mean, Kirana is a completely different vertical with its own nuances. Pharma is a different vertical. Agriculture is a different challenge altogether. So if we were to build product, it was not one size fits all. We had to really fine tune, tweak the product slightly. Credit cycles are different in different sectors. Seasonality plays a role in some sectors. In some sectors, it's not. money rotates faster in some segments, in some sector segments it's very slow, right? So all that comes into play. So those were certain areas where we took their advice, we went to them, and in fact we continue to do. Now that we have to an extent reached a stage where SME BNPL is doing well for us, what is the next product for us? So that product roadmap thing, we've now started reaching out to our investors again to understand what is next that Rupify should be doing, and so on. So I think it is at frequency which helps both of us. Definitely not a day to day or a weekly kind of a frequency. But it's when we definitely need their help. So, and I say that again, I mean, as founders, you need to be shameless. You should ask for help whenever you need help, right? Because without asking, nobody will come to help you. So we do that quite often. It's good that we have people like Kunal and Shnir who come from completely financial services background. There's Bini who understands commerce and Indian internet economy so well. There's Ramakant who's built a consumer and large company like Livespace in a affinity and luxury segment quite well, and now going to the next middle income level as well. So I think from that perspective, we go to them for the respective input whenever we require that.
Got it. This actually, what you mentioned kind of brings me to my next question as well. Like, what are you most excited about building in next 6 to 12 months at Rupify?
Okay. So I think we call it B2B transaction space that we operate in. I think what I'll say is UPI has been a great disruption in India, but it has disrupted P2P and P2M payments, right? When you pay a merchant or when you pay a friend, that's where UPI comes in. But B2B payments don't happen through UPI, right? It's largely offline. So B2B transactions, like a retailer paying a distributor or a business paying another business, these B2B transactions are largely offline, and UPI still has a very, very small share in those. So how can we change the game of B2B transactions as a whole and add credit as a layer on top of it is what we are trying to work on for the next, I would say, 12 months.
Very interesting. Actually, in sort of consumer space, UPI has taken off very well, but in B2B, I don't think like we have the clarity of how much even market share UPI is. Like, yeah, it is
It's
pretty
very
less.
low. It's
Yeah,
hardly single digits because businesses still do. I mean, we do that. We pay our vendors. The vendors ask us for UTR numbers, and then they track that payment, and then they tell us that okay, we've received the payment. It's weird, right? I mean, uh, there's there should not be a need for such manual process when
right.
business is paying another business, but that's how it is, and it's not just India, it's globally. I mean, even in US, if you see, B2B payments and B2B transactions are largely paper driven, not even digital.
Yeah, yeah, very true actually. So yeah, coming to my last question, this like sort of apart from work, like how do you sort of spend time, say, in upskilling yourself or otherwise as well? Uh,
Okay, upskilling. I think I do follow a lot of uh, tech platforms. So a lot of tech news I keep reading. So just to keep myself updated on what's going on. I think technology is one thing that will be at core of whatever happens in the future. So that's where, if I have to sum up everything in one word, I think you need to be updated about what's going on in new technology. So keep reading about that. uh, Otherwise, when I'm not working, I think I mostly cook. So that's my passion right now. You'll find me in the kitchen creating a mess most of the time, but I do that. I love cooking, so that's the stress buster for me.
very interesting actually. Even like I have picked up and like did a lot of it, but primarily like started with the pandemic when cooks stopped coming. But then yeah, I have sort of picked up on it. So it was great having you,
Okay, Mehraj.
Anubhav. Yeah, looking forward to sort of catch up with you again in future.
Sure.
Thank
Thanks
you
so
for
much.
taking out your time.
Good luck, man. Thank
Thank
you.
you. Thank you.